Hey everyone, Couch Investor back to another earnings video. So let's talk about Intel. Intel is down 10% or so at the time of making this video. Unquestioned execution, unquestioned leadership. Well, I did have a lot of questions when looking at this report. It was a disaster of a quarter, but at least they admitted that during the earnings call. Now we're going to have a look at all the numbers in this video. I'm going to touch on a couple of things that they mentioned during the earnings call, such as their new Foundry customer, which was announced earlier this week, a company called MediaTek. They're a fabless company from Taiwan. And Pat Gessinger, the CEO, also added that it is speaking with 6 of the top 10 chip design companies to become a customer for the nascent business. So that's a positive point. And as for positive points, I think we'll leave it at that for this quarter. Now, I do want to show you the 3 negative points, the 3 reasons, let's say, that caused for such a disastrous quarter. So this is Dave's remark, the CFO. So first of all, he said weakening and uncertain macroeconomic environment impacted by inflation, higher interest rates, and the war in Ukraine. Second, a much larger than expected OEM inventory correction. They said it's one of the worst things they've seen in the last 10 years. And third, worse than expected COVID-driven demand reductions and supply dislocation in China and other parts of the supply chain. Now, some of you might say, fine, these are, let's say, okay reasons to give because most of these things are not really in their control. But unfortunately, it's not the full truth because they did talk a lot on the call about the Sapphire Rapids, the bad execution on that and why it keeps being delayed, and the ramp up will probably only be at the start of 2023. Even though they say it might start at the end of 2022, I probably think it's going to be early 2023. And well, that's one heavy hit that they had to take, as you will see in the numbers. By the way, I've covered Amazon and Roku as well. Those videos will be in the top right corner. And if you want to support this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to full.com/couchinvestor and make sure to check out all the other links down in the pinned comment, some of which might actually save you some money. So let's dive into this disastrous quarter. All right, so the executive summary, basically what I said before, revenue profits are impacted by multiple factors, the one we touched on earlier in this video, but there is a little bit of positives. Let's say delivering Moore's Law at scale. So they shipped more than 35 million units built on Intel 7, finally moving away from Intel 10. Intel 4 ready for production in the second half of 2022, unless there are more delays, and Intel 3, 20A, 18A are on or ahead of schedule. Again, remains to be seen what happens. They're also making progress on long-term strategy, so IFS partnership with MediaTek, as mentioned before, to manufacture chips for smart edge devices, focused on prioritizing investment, driving smart capital, and improving execution. Now, I also do want to mention something about the CHIPS Act. While this is on its way to the president's desk, it is not signed yet, but it will tremendously help a company like Intel. Now, saying that, they are not taking anything into consideration for 2022, the positive impacts of that CHIPS Act. It will most likely have an impact on 2023, just so we're clear. And as for the industry outlook, so the near-term cyclical slowdown, so they expect approximately 10% decline in 2022 PC TAM. This is something that we've known for a while. AMD touched on that as well, so it's an overall problem. But the major problem here is not PC, it's actually, well, the data centers. So first up, Q2 financial highlights. Revenue came in at $15.3 billion. That's down 17% year over year, and a big miss from their own outlook, a miss of $2.7 billion. Gross margin extremely low, 44.8%, down 15 percentage points year over year, and 6.2 percentage points below the April outlook. Now, they do expect this to go back up towards the end of the year, towards their goal of 51% or so. Earnings per share, again, down significantly, 79% year over year, and 41 cents below April outlook. Now, with regards to EPS, remember we've talked about how cheap Intel looked? Well, it will not be looking very cheap if EPS keeps dropping like that. Now, as for their largest segment, which is CCG, Client Computing Group, so revenue down 20%, obviously slowing down in the PC market. Operating income is then down 73%. Operating margin last year was 39%, this year only 14%. And as for data center and AI group, and this is the issue, right? Last quarter was a positive for this segment. This quarter, not so much. It's down 16%. Operating income is down 90%. Now, again, this is because of their investment in the product roadmap, but also because of the delays of their products. And data center is a segment that is growing tremendously fast for every other competitor out there. I mean, we've seen Amazon, we've seen Google, we've seen Microsoft. Their sales are all going up when it comes to cloud. And next week or 2 weeks from now, we're probably going to hear AMD. And then at the end of August, we're going to have NVIDIA. And I can probably be certain that their data center segment is going to be much, much better. Now, as for Next, that one actually grew in revenue 11% year over year, but operating income here, again, same story. It's down 60%. Basically, they say here lower operating income on product mix shift, lower inventory sell-through, and investment in process and product roadmap. Now, obviously, we've known about their investment in every segment of their business. So a lower operating income is, let's say, normal for now. Now, as for Mobileye, this is, let's say, a positive segment for the business, hence why they want to IPO that part of the business. So revenue grew 41% year over year on higher demand for IQ product, and operating income is up 43% year over year. So that's quite nice. As for Intel Foundry Services, or IFS, revenue is down 54% year over year, driven by lower sales of mask writing tools, and operating income also down tremendously because, well, lower revenue and ramp of IFS operations. Now, when it comes to outlook, this has been decreased and impacted as well as expected. They now expect revenue to come between $65 and $68 billion. That's down 8 to 11 billion from their prior outlook, and that's down 9 to 13% year over year. As for gross margin, to come in at 49%, down 3 percentage points from prior outlook, and down 9.1 percentage points year over year. As for earnings per share, again, taking a huge hit here and probably increasing the PE, so $2.30, down 57% year over year and down $1.30 from their prior outlook. As for adjusted free cash flow, they expect it to be negative $1 to $2 billion and net capex to be $23 billion. They are reducing capex, but it will not impact the long-term roadmap. Most of it is just, well, pushing it to the next year and the year after that. And as for next quarter, they expect revenue to be down 12 to 17% year over year and coming at $15.5 billion at the midpoint. Gross margin 46.5%, down 11.8 percentage points year over year. And then earnings per share 35 cents, down 76% year over year. Now, I did mention at the start of this video that they said during the call that they expect gross margin towards the end of the year to go back up to around 50-51%. Now, in this report, you might not see this in effect right now, but they do expect Q4 to be a stronger quarter, so it remains to be seen what happens. But they also said that they do believe that Q2 is basically the bottom for them, cannot go lower. Well, as Peter Lynch said, it can always go lower. But hey, Pat is, well, a very, very particular CEO. He's very, very excited about, well, the future of Intel, and maybe sometimes he might not want to talk about the negative stuff, but that's why we have a good CFO, which has no issues talking about that. But overall, with Intel, it's the same story over and over. It will take a lot of time and money and effort until this huge, huge company goes back on track. Now, obviously, this quarter was a disaster. They know it. They say it's the bottom. Well, now it just remains to be seen if Q3 and Q4 become much, much better. And then we go into 2023, 2024, 2025 on the roadmap. Should be a completely different story. Remains to be seen. There is one danger though, and that's the fact that they might reduce dividends if this continues. If this improves, then fine, dividends will be safe. But if the state of Intel becomes worse and worse over time, then probably dividends might be impacted. That's something to take into consideration. Obviously, do share all your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button, and I'll see you all in the next video. Bye bye.